Joining us now for more on the markets, Jim Grant, founder and editor of Grant's Interest Rate Observer. Probably you don't have a molecular biology degree, I guess, Jim, but you sure know a lot about monetary policy. Where are we now in terms of central banks around the world and the ability to do more?
Well, we are at kitchen sink level, which reminds me, Joe, of something that happened 200 years ago, which is a famous raging panic in England in 1825. And in subsequent testimony, a director of the Bank of England said that seeing the dreadful condition of the public, we did all we could. And, quote, upon some occasions, we were not over nice. Meaning that they broke all the rules that are in place. They lent against merchandise, for Pete's sake, not merely against commercial bills or exchequer bills. So I think that the impulse to meet a crisis like a lion, that is an age-old impulse with the central bankers, and that's what they're doing. What is different these days is that we have been meeting non-crises like lions. We have been, upon many occasions, not over nice in the preceding 10 years to this. So we go into the crisis, as it were, with a compromised corporate financial immune system, huge leverage, very low-quality debt, and very high equity valuations, with the result that the financial part of this panic, we have two panics, it seems to me. We have a hypochondriacal panic, and we have a financial panic. And the financial panic is aggravated by the events following 2009 and preceding February 2020.
Hypochondrial panic.
Well, we have an ascertainment panic. I mean, people are taking their temperature even more frequently than they're washing their hands. Imagine if CNBC and CNN and the rest of them reported every single ordinary case of influenza. I mean, I think that a friend of mine from years ago, a guy named Preston Carter, a Texas real estate operator, said that you look at cows in a pasture, and a candy wrapper blows in, and one starts running, and everybody starts running. Well, that, to a degree, describes the nature of panic in all creatures. And it seems to me that part of what we are dealing with is simple panic, abstracting entirely from proximate causes, from science, from finance. Oh, my goodness. Jim, okay, we've had hedge fund titans talk about the end of times, but it seems to me that what we are about, to a degree, is simple panic. I mean, what happens if there was an announcement with every single auto fatality? We Americans endure 40,000 auto fatalities a year, Jim, in the service of a functional economy.
Jim, but what are you recommending? Because I think, look, it is a very uncomfortable conversation, which I think is happening privately, but nobody would happen in public, really. People are talking about trade-offs, and I don't want to necessarily have that conversation right now. But what are you suggesting behind what you're saying?
I'm not quite sure I get the question. I'll take it down to the microscopic level of a financial periodical called Grants. What we are trying to do is to look for opportunities in chaos, mispricings. We looked at a Series F preferred
30 seconds, Jim. 30 seconds. Sorry.
There are things for sale that you'd want to own.